Robschild. Nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. J.P. Morgan once said millionaires don't need astrologers, but billionaires do. And so we begin. Today is Wednesday, March 20... Oh, not March 21st, it's the 20th. March 20th, 2024. Today we had the 2 p.m. FOMC interest rate decision and conference. And so the big headline coming out of this is, what happened? The Dow rises 400 points to record close after Fed says 3 rate cuts are on the way. They hold rates steady and maintains 3 cuts coming sometime this year. Wait a second. That's not what was supposed to happen. I was expecting a bit more hawkishness. I mean, inflation is still higher than 2%, so why in the world are we talking about maintaining the idea of cuts? It doesn't say to me that this is good news. Cuts are not good news. This is one important point that I think is just important to realize. What cuts mean is that they see problems with where interest rates currently are. In other words, borrowing costs are too high, and they want to bring them lower 3 times this year. They are seeing a slowdown. They are seeing chaos ahead if they don't cut enough fast enough. Now, how did the market take this? Well, let's take a look at the charts. So the S&P 500, once again, my crystal ball is wrong. At least on the S&P 500, I thought that this topping tail last Friday was not going to get broken, and we clearly broke right through it today. Now, I do believe that this can easily reverse tomorrow. Now, then the news is out here. You know, Europe and Asia have to figure out what do they think about this. And also retailers, after the market closes, have to figure out, okay, what's going on here. You know, I think I'm still bearish, even though we have this big candle here. At the end of the day, really, cuts on interest rates mean there's a slowdown coming. And once we start cutting, every time in history we just keep on cutting as the economy keeps slowing, and then they have to chase it down in order to get things going again. Now, is it possible that we're going to be seeing this soft landing thing? You know, historically people have used the term soft landing many times before, and usually when it's at its peak and people are saying, yes, you know, everything worked out fine, that's when things start really hitting the fan. Now, how long is that going to take? It's hard to say exactly. On a really short-term basis, though, I'm going to look into my crystal ball and say, I think this is a blow-off top. I think it should be a blow-off top. But we will see. We'll see what happens. I have a number of charts to go through and talk about. So, moving on to the Qs, I said that I'm shorting the Qs. I still am shorting the Qs. We did not break to new highs in the NASDAQ. We're not breaking to new highs. And so, you know, here's the other thing. This news is out now. It's already basically priced in. I mean, apart from overnight retailers, Europe and Asia, that can affect things to some degree. But the news is already out. It's over. And so I think again, I think this is going to be a blow off top here. And as far as just, some charting details go, we're not back up into this channel, and we're certainly not breaking above this channel. If this was a true, very bullish move, I would actually want this candle to be very large. I would want it to be at least touching this trend line here, if not breaking through it today. And the fact that we're not seeing that spells out weakness to me. Even though markets are up, they're not enough to make me feel like bullish. So let's move on to a few more charts to look at some other things going on. So here's a XHB, Home Builders Index. So this market is seeing all-time highs. We had closing all-time highs. And so as a leading indicator, I had been talking about how this is just going sideways, and I thought it was going to break down. This is a break higher. And, from a technical standpoint, from a flag and a pole right here, this should be actually going up on, looking at it as a chart perspective by itself. So this could mean I'm wrong. This might, if this heads higher along with everything else, maybe I'll end up being wrong. I don't think I am, though. HYT, I love how high yield corporate can go through these meetings and just not care at all. Like, it makes me sort of wonder how the bulls and the bears are fighting here, essentially, and can't decide. I think there's a violent fight going on right here. I don't see this as like a complacent market. I think there are aggressive buyers that are saying, hey, this is high yield corporate. The fact that everything is peachy means that bankruptcy risk is lower, so I can keep getting that 10% return on these high yield corporate bonds. And then, but keeping it from going up higher is the fact that you have bears that are seeing cuts coming and saying, like I'm saying, the fact that we have to cut interest rates right now, it doesn't mean that bankruptcy risk is going down and higher risk things should increase in value. And so, but it's very entertaining. It's always very entertaining, especially seeing these big reports come out and HYT just saying, meh, who cares? All right, nothing really happened today. Meanwhile, the stock market is going crazy. It's pretty interesting. One other notable little chart I wanted to bring up is actually the dollar. So this is compared to other world currencies like the euro, yen, etc. And we had a big drop in it. And so basically the idea here is that the fact that lower returns will be coming in on the dollar on the guaranteed rate, make it a less attractive currency. That's a part of it. Another factor is that, the dollar increases in value when there's disinflation or deflation, but if there's more concern about inflation, then it can also drop. And so the value of the dollar, this chart makes perfect sense in every way. I'm also going to point out that when the dollar drops, there's sort of an automatic readjustment of stock valuations, U.S. stock valuations, to go up. The idea with that being, if the dollars are cheaper, then earnings are worth more of companies. And, and so that's how that works. Another very interesting chart I wanted to point out today is the VIX. This is the risk indicator. It shows where options contracts are, and so people had a sigh of relief today. We broke through this little trend line since really the beginning of the year here that we've been hitting many times, and we broke through it. And so again, if we have a collapse in markets, if we have a fake out, not a breakout, this can pop right above this line. And actually, that is what I am currently expecting for my crystal ball. Next interesting chart is the 30-year bond yield. Not much movement today. I find it interesting because it didn't move. If inflation is becomes more worrisome because there's cuts coming, you would expect the yield of the 30-year to go up. And we're not seeing that. And so, again, like I said before, there's a violent battle going on here. There's a war here. There's people that think inflation is going to continue higher and the yields should go up. And there are people, again, like me, saying, well, hold on, if we're expecting cuts, well, this is a darn good yield. They even stated as part of the FOMC meeting, I have a quote here directly from Barron.com talking about what's going on in this is for 2026. Let me put this here. It's for the end of 2026. Now, they're seeing that by the end of 2026 that it should be higher than it was expected to be before. But when you take a look at the long end of the curve, if we're really going down to 3% on the short end, then 4.5%, over 4% for 30 years is still a great deal, considering if this plays out to be true, if we drop down to these lower levels by the end of 2026. Again, I think we're going to be dropping harder and faster in interest rates, just because every time it happens, it's the same story. It's the same darn story over and over and over again. They cut and then they realize they didn't cut enough. The economy slows down, earnings contract, the market collapses. It's the same story every time, and I'm expecting it to happen, and I'm still expecting it to have already started. I still think we're at a top in the QQQ. Although I was proven wrong in the S&P 500 so far. Here it is again. But I think that this, I'm maybe I'll sound like a broken record, but I think this is the high. I think today is the high. I think the news is out, and I think this is all the gas that's left, and I think we're going to be going down from here. I want to point out, notably, Bitcoin had a bit of a reversal. So people, again, jumping right back into risk assets, not so much to take out our previous all-time high. If today's meeting was really, really bullish, you could expect way more of a jump. And I don't expect this to continue. This was a sell the news kind of event. I'm going to stick to my guns on that. Similar thing going on in ARK. We have a big spike up, not the most dramatic looking large green candle. We're not breaking out above previous highs or anything like that. It looks more like a bounce to me than anything else. And then we have SMH. This is semiconductors. Sorry, let me zoom in here. And this is showing more of a weakness here, kind of like in the Qs, how we're not seeing the highest it's ever been. Same in semiconductors. And so this is where the nervousness is starting. I think this is going to continue lower, and I think that it will likely take a lot of markets with it, but we will see. So all in all, that's really all I have for you today. If we take out the highest high in QQQ, I will take a loss on my short of the Nasdaq 100. It's not a big deal. It worked as a hedge. You know, if I'm wrong, then that's also great because the rest of my portfolio went to the moon today. So, but 5%, I'm still short with 5% of my portfolio, and I'll stay there until the Qs get above 448 and about 50 cents, 50, 60 cents, something like that. Anyway, that's all I have for you for today. I hope you enjoyed the show, and thank you for watching. Robschild.